brief introduction, what are you guys working on? You both have kind of very different experiences, thinking about currency from very different vantage points. And so it would be great if you can just do a quick introduction, maybe in like 30 seconds to a minute.
Sure. Do you want me to go first? Okay. So I'm with the World Economic Forum. I just joined this year. I am part of the Crypto Innovation Accelerator. And part of what we're doing is trying to explore how crypto is really being used under the pillars of E, S, and G. So we are taking a very practical approach, really looking at the work that's being done in this area. Under the E pillar, we have working groups focused on reimagining carbon credits, so very closely tied with the refi movement. We're looking at energy consumption, and we're looking at Web3 projects. Under the S pillar, ethnographic research, I think Tricia, you were speaking earlier today, who is leading that research. And that has, the output is a variety of reports that should be useful to builders in the space. So what does a good application need to look like? What resonates with users, that sort of thing. And then under the G pillar, we're doing work on DAOs and soon to be looking at identity, digital identity. So that's a flavor. At the forum, this is bringing together public and private parties to have engagement and discussion and work product that furthers the industry. So that's what I work on.
All right, my name is David Casey. I have been experimenting with currency design on top of public blockchains for about 7 years now, so I've gone through a few experiments. I founded a blockchain protocol built on Celo called Resource Finance. Resource is a protocol for mutual credit networks. And mutual credit, how many people have heard of mutual credit before? Okay, not too many. Usually it's not related to blockchain necessarily. It's in some measures, centuries-old monetary system that's an alternative to central bank-issued fiat currencies. It's basically multilateral barter or a closed trading circle amongst businesses where businesses can essentially trade with each other on credit using their own products and services as collateral to consume from each other. So that's resource finance. And I am also a scout for the Celo blockchain. So I co-administer a small fund called the Celo Scout Fund, and I recruit new companies to build on Celo. So if you're interested in building on Celo, come talk to me.
Awesome, thanks. So let's maybe start diving into what do we think about when we say what is currency. So for me, when I think of currency, I think it's a narrative, right? Currency, you cannot separate that out from history. And the historical practice of everything that is tied to money going back generations, and that can be the origins of currency, but then how it evolves over time. But maybe we'll start with you, David, as someone who's kind of talked about both from a Web3 blockchain standpoint, as well as things in mutual credit that predate blockchain technology. What are the kind of the core functional characteristics that you think of when you think of currency?
Yeah, so currency, as we know it, it's a unit of account. It's a medium of exchange. It's a store of value. And we can't really talk about currency, I think, without talking about credit, because currency often originates in the form of a credit line or a loan from either a central bank or a commercial bank to another party. And therefore, the creation of new currency, we can't really separate from those actors, commercial banks and central banks, and what are the interests of those actors. And today, the currency, let's say, market for currency is not free. It's more like monopolistic. The US dollar dominates the currency landscape, and many other central banks around the world are often forced to reckon with Federal Reserve policy in order to keep their currencies competitive.
I think there's another aspect to currency, and that is if we're going to use it for transactions, it has to be in a place where it's used with no questions asked. And the no questions asked is someone else's term with currency, but I liked it and I'm going to adopt it, and I wish I could attribute it to the right person, but I can't. But it has to be no questions asked because if you are transacting in the real world, taking that minute or 5 minutes or an hour to figure out how you're going to pay and how you're going to use that payment later on, at that point, there's way too much friction in the transaction. So getting to that point where you're using anything in that realm of no questions asked, very, very difficult, I would say. We don't have that problem in the US. We have the full faith and credit of the United States behind our currency. It's a reserve currency of the world. We don't think about it. That is not the case in many parts of the world, as we know.
Yeah, actually, I was just down in Bogota, Colombia, with a few Venezuelan entrepreneurs building on Celo, and they were showing me what the payment and currency and banking landscape looks like in Venezuela, and it is a rainbow of different options from US things like Zelle and Bitcoin, and actually USDT on the Tron network is a real form of mobile payment in Venezuela that you can pay for food delivery. So it's, yeah, interesting to see what emerges in a vacuum, and it's not at all clear in Venezuela.
And that's not a great environment to transact in, right? Because then you're not just buying the thing, now you have to negotiate how you're going to buy the thing and how you're going to deliver for that thing. And that's just too many steps. So currency, when we talk about currency, it's incredibly important when it comes to, our economic health.
And so I think there's kind of two interesting perspectives that I think you both have. So Brynly at the World Economic Forum, which is a relatively centralized institution. And then David, I think you touched on mutual credit, which is obviously far less centralized in terms of how we would think about a monetary system operating. So I'm curious from either of you, do you think there is, what is your views around centralization around anything as it relates to currency? Is that something that, is there some amount of centralization that has to happen, whether that's, cash in, cash out providers, for example, there's centralization there? Or do you kind of envision a world in which you can have a fully decentralized currency?
Well, I hope that we can envision that world, because that's part of, I think, what the ethos and vision of blockchain and crypto is. So I think where I see my core issue with centralized currency systems is that when currency originates, it originates from some centralized entity, in our case, a central bank or a commercial bank. And these entities have their own agenda. They have their own interests. They're staffed by human beings that come from some thought school, let's say the Chicago School of Economics, some belief system, and they have connections to industry, let's say. So if a commercial bank originates a loan to a fossil fuel company, then, and let's say that controlling currency gives you the power to control the means of production, and the means of production give you the power to determine what the kind of industrial outcome of a society looks like, where the industrial development direction goes. Then we have a situation where fossil fuel companies are being prioritized over renewable energy companies. And maybe that's not the interest of the broader section of society, but it is the interest of those within the circle connected to the central bank or commercial bank actors. And so I would argue that today we have a governance issue. And the issue is that these centralized systems are not governed by a group of people that have the interest of the common public in mind. So my hope is that more decentralized governance systems would create outcomes where, let's say, loan origination goes to a renewable energy company, and that leads to a different kind of outcome in the means of production, and specifically in this case, energy generation.
So the question of, does currency need to be centralized or can it be decentralized? I think the core question there is, how do we trust it, right? So I think there's room for both. I think with USDC, that makes a lot of sense, right? It's one for one. You can trust Circle and Center to make sure that the bookkeeping is right. They're regulated. That makes sense. You get a digital dollar. You can use it. You can use it as you want. I think we have some room to grow in terms of trusting decentralized stable coins and currencies. I think we almost have to get our minds around how that works and how to evaluate those systems. I think it probably needs to come with some kind of collateralization, some structure that is, some structure that can show some trust in the system, especially after the events of this year. So I think it's possible, but it's going to take a lot of creativity and a lot of mind changing to get there. But I do think there's room for both. I don't think it's, one size fits all for all purposes. Despite what I said about having, the no questions asked and too many currencies, I still think there's room for, some flexibility there and diversity there.
And I would also say that up until recently, we didn't really have a competitive marketplace for currency. It's often illegal to use other currencies than the state-issued one in many countries around the world. Until I think recently, it's more and more difficult to actually mandate that. One thing that I think is at the foundational concept of Celo is creating money backed by something that we want to see more of in the world. So today we have a system where the increase in the money supply is roughly correlated with the liquidation of nature. And that's because of the incentive structures we've designed. And the design challenge would be, how do we design currencies that as the monetary supply grows, the circulating currency supply grows, so does something positive we want to see in the world, such as more trees or more natural capital, more ecosystem services, more carbon sequestered, et cetera.
I think that's the holy grail. You put all that together and you come up with a system that is well trusted. You've changed some of the fundamentals and it can be used, no questions asked. But that is, if you have a digital representation of the dollar, it's not changing the fundamental characteristics of the dollar. You're still very much in that realm. This idea of programming money is very Celo-centric. It's what brought me here so many years ago, and is something really interesting to work out.
So if anyone else has questions, feel free to jump in. But in the meantime, one thing I want to ask is, let's make this actually, I think you guys both connected this really well. Let's actually go through some of the key problems of money in its current form, currency. So that could be both, take fiat, but not only fiat. I also want to think about even the existing form of digital currency itself. And that's digital currency in the form of things that are offered by traditional fintech companies. Like M-Pesa is essentially a digital currency for Kenya, which we should keep account for, because that is, even though it's a centralized execution. And then, of course, you have digital currency on a blockchain. So that could be USDC, Bitcoin, Celo, anything along those lines. As you guys are kind of seeing this landscape of currency, what are some of those core facets that you're like, hey, these are still problems that we really need to solve for folks to kind of really think about?
So I think governance is one that I mentioned, just having more fair, transparent systems of governance that enable outcomes that are actually good for the public. So when we have small centralized interest groups determining monetary policy for large amounts of people, and that's not just like, Federal Reserve to US citizens, I'm talking about the US to the rest of the world. Like right now we're seeing this dollarization effect where everyone wants dollars, and therefore the dollar is becoming stronger and stronger, and central banks in other countries are having more and more difficulty actually instituting a monetary policy on a national level. So that there's a sovereignty issue here, like monetary sovereignty. Financial inclusion, that's access to the financial system, access to credit. That's a big one. So I know that's something that Celo cares deeply about. How do we design financial systems that enable access to credit for more people? So the way that credit is determined today may exclude large numbers of people because, again, it's designed by actors that have their own interests or agendas that are not necessarily meeting the common public interest. Then the last one we have is the environmental or climate impact of a monetary system, which that's pretty complex. On Bitcoin, it's very simple to see. The more the Bitcoin system grows, the more carbon is, the more electricity is burned to run the system. So there's an inherent flaw to scaling there in relation to environment. And we can talk about renewable energy, but I think in a very fundamental level, there's an issue there. And we can say the same thing with any other currency system that has a larger and larger climate footprint. If it's backed by oil or war, et cetera, then there's issues there.
I want to go back to a part of your question. So when you talk about fintechs and digital currencies in their forms, it might feel like a digital currency, but where it's touching our traditional banking system, that's a very old system, and it has real challenges. And I think it's really important to not overlook those, because you can innovate around the edges, but if the core is still our traditional banking system that separates the ledgering from the actual money, that's a flawed system. So let me just talk about or a problematic system, say. So if you are doing remittance transfers, for example, and you are a remittance transfer company and you are handling transfers from the US to, say, Mexico, there's more happening than just keeping a ledger and moving money. You have to think ahead if you're that provider. You have to think ahead about what those remittances are going to be into Mexico. You need to make sure you have that liquidity available, which means as a business, you're not just taking a ledger, you are holding capital, and you're hoping that you get it right, and you'll never get it right. You'll either have too much or too little. Either way, that is wasteful, right, in terms of just currency flows. So to have this bifurcation where you can have banks that are keeping track of ledgers, but real liquidity needs to move in order to satisfy payments, this is something that I think we don't think about it until we see remittance payments that are, charging 20% or more. But here's the thing, with digital assets and having this ledger, the ledgering and the liquidity is one, and you can move it around the world within 3 seconds, 5 seconds, whatever it is. And that is extremely powerful. So I think that when we rethink about currency and what we can do, it's something that might seem very small, but it's huge in terms of how you manage capital around the world.
And yeah, I want to add to that because we're talking about instant settlement times, right? And in kind of velocity of money theory, the faster you can get money to flow through a system, the more you can turn it over, the more trade, the more economic growth you have. And so having a global instant settlement network, like a blockchain network, has a lot of ramifications for global economic growth. Whereas, I don't know if you guys were sending wires back in the day to Latin America, Africa, sometimes it would take 7, 8, 9 days to get there. Sometimes it wouldn't get there at all. Sometimes the bank holds it and then asks you what it's for, or just it disappears because it's a corrupt country.
And here, I don't think we've ever experienced what that global velocity would mean. We have yet to really even scratch the surface of it. And that becomes really interesting. I would love for someone to model that out, how that would work.
Yeah, and then there's also the risk of FX fluctuation in the time that it takes to settle, which is an issue for many companies that operate outside of the US.
For sure.
So I don't know if it's a hot take or not, but I'm always struck by this figure when I look particularly at stablecoins, when I think approximately 98% of stablecoins right now are all US dollar based. Which really draws a question of, are we essentially, in our current model, essentially advancing US dollar hegemony in an entire while calling it a new economic model? And I don't know if that's something that's fascinating, where we've had other stable coins launch, including on Celo, but even then, general adoption has still been dollar-based. And we're still, even also the backing, if you'd have some other type of wrapping, remains a dollar. So I'm curious to get your thoughts of, are we basically right now in the process of what we're building in Web3 is essentially dollar-denominated everything, and we're actually just advancing the US dollar hegemony around the world? And how might we think about that, and how might we kind of reckon with that?
So I would say, short answer, yes. We are extending US dollar hegemony onto the blockchain and globalizing it in a way that is very difficult for other countries to defend against in terms of capital controls, because once you can access USDT or USDC on chain, you can move money instantly globally, and it's very difficult for a nation state to defend the peg of their currency when their citizens can easily hold and flow dollars in and out of the country on a blockchain. Even Bitcoin and Ether are dollar-denominated assets, and then DAI is basically backed by Ether or USDC, which are both dollar-denominated assets. So as long as these are all dollar-denominated assets, we're not really creating something new in terms of a monetary system or a currency system. One way we look at what we're doing with resource is enabling communities, networks, business associations, even nation states to create another type of unit of account that's actually backed by something else that's not a dollar. So in some case, it can be fertilizer, for example, like units of fertilizer, or units of a commodity like coffee or cacao, which has its own issues, but we're basically creating the technology that enables communities and networks and cities to create their own assets that are backed by something other than the US dollar.
I might have a slightly different view of
That's
sort
great.
of what this means. The technology enables digital assets to come in any number of forms, right? You can have a stable coin tied to any number of things. But it goes back to one of the earlier things we were talking about, and that is trust, right? And until we develop trust in the system, to me, it doesn't surprise me that mostly we're seeing copies of the reserve currency of the world, which is the dollar. I mean, like it or not, this is sort of how the world operates. So in many ways, it doesn't surprise me that that's where we are. But I don't think it means that that's where we forever stay. I think the technology it's available, and we're experimenting. The world is experimenting. But to me, it doesn't surprise me that this is where we are because of, yeah.
And yeah, to give you all an idea of how dominant the dollar is today, I heard the statistic today somewhere between 60 and 80% of international trade is denominated in dollars, which basically means that companies need dollars to settle trade, which cements the dollar as the currency that is needed by everyone, which the demand will be there for a long time to come.
So, and just for that, no wonder that a lot of digital assets are represented in USD. It's what the world is understanding as the reserve currency and trading currency of the world. But it's incumbent on all of us that it doesn't end there, I think.
So we have 4 minutes left. I want to be cognizant of time. Maybe jumping to the last question is, what are examples in your kind of work and research that you've seen in which you're looking at kind of different economic designs and different currency designs that you're like, hey, this is something that we should kind of look at more? I think from both of your vantage points, I imagine you've seen kind of a lot of different projects, a lot of different solutions. And so I'm curious to know, as you've kind of seen that, you're like, hey, this is something that we should maybe look into further, potentially look to build out more, continue testing this. Curious to get your thoughts on what you've seen.
I don't think I'm going to answer your question, actually.
That's fair.
Because I don't work so much on currency, but I do have an ask that I think this would be a good environment to put that ask out there. And that is, whether we want a digital dollar or stable coin or new currency to evolve, none of that happens until we have wonderful, user-friendly, intuitive products, right? We have to simplify the technology, the user experience of this technology, or none of this really matters, because the people that need it the most need the best tools and products. So I don't do a lot of work in currency right now, but this is what I see over and over in our research and in the work that we do, that the user design, the design needs to improve. And for more questions on that, please direct them to Trisha Wang, right in the front row. Yeah.
I will answer your question with design that Resource is working on. So if central banks and commercial banks have a system that's premised on lending with interest, what the Resource protocol is doing is disintermediating the banks. So creating a system that does not need interest, because there is not a bank in the middle between money and the borrower, so that the loan does not need to generate interest. So in the system that Resource has built, essentially businesses or actors or individuals are borrowing from each other, and therefore there is not the need for interest to maintain some entity or corporation or structure. So disintermediating the banks essentially eliminates the need to charge interests on loans, and I think fundamentally that can change how currency design is structured.
So we have time for 1-2 questions. Yeah, I saw you.
David, you touched upon it. You mentioned the idea that it's difficult for people to comprehend the value of something because its denomination is measured in one thing in many ways, like the US dollar is, and it's hard for us to say a hamburger's worth $1 now versus $5 the next day, right? If
Yes.
it's not stable as one of those three properties of money. So in that case, how do you begin to cement the idea, or touching on the UX conversation, come around to the fact that to have this psychological shift and learning of a new currency or something that is devout of sovereign control, how isn't education kind of a big part of that, and how can you teach people about that idea?
Yeah, so I have been trying to get merchants to accept crypto, and specifically, is the mic working? So yeah, I've been on a journey to get merchants to accept crypto and specifically Bitcoin for 8 years, and I could never get merchants to accept a volatile crypto because they needed to use the money to provide the product or service, so they need some kind of stability. I would define money, going back to the what is money question. There's an interesting definition of money, which is that it is a collective hallucination. It's essentially something that we all create and then agree on together. So if money is a collective hallucination, it means that we can create another one. And the reason I say this is because one day, let's take Venezuela or Argentina, for example, there becomes a lack of belief in that collective hallucination based on some factors, perceived or real, happening around them, or some kind of group belief. And then the money loses its value slowly or quickly, as is happening in a number of countries around the world right now. So when this happens, there's actually an opportunity to present a new consensus agreement. And I think that it's important that it's tangible for people. So it's really difficult to create a currency that is not denominated in dollars or not related to the dollar. I think commodities are an interesting example. So in post-Soviet Russia in the early 1990s, I know that, and again, this is like in a vacuum what emerges. So bottles of vodka were actually the store of value and medium of exchange for a while in some parts of post-Soviet Russia. So that's an example of a commodity that has intrinsic value. So I think looking around the world to see what is like universally agreed on that has value. A kilowatt hour is a really good example. A minute or a gigabyte of data is a really good example. I believe that currencies in the future will look more like this. They'll be backed by energy or backed by some product or service that you can redeem it for that's basically liquid and universally the same around the world.
I know we're at time, but just to respond to that, I think we could also call it a collective contract instead of a hallucination, but either way. But I also wanted to say that your vodka example is a good one, that I think humans, we come up organically with what our currency will be, right? And that is, it depends, right? What has the properties of currency? So I don't know if we need to educate so much as be open to what people are already gravitating to. We can go to our own research from the Celo Foundation. Early on when we did research in refugee camps in Tanzania, people were using dried peas as currency. And that happened organically, and it had properties. It was scarcity, it was durable, all of these things. When you talk about M-Pesa, people using mobile minutes as currency. They didn't envision it as currency, it just was easy to use, and people understood the value when it held its value. So yes, we can educate, but also I think we are almost organically in tune to see the properties of currency and use things that are useful, which goes back to my point of let's build really good products.
I think we have one more question, and then we'll close out. We might be out of time, but I think the gentleman in the back in the white.
I want to address the USDT pegging the US dollar versus euro. One of the major structural difference in euro is a bond-based currency. So you don't want to peg your currency to a bond-based structures. Then because they go to the bank to buy the bond to structure the currency. That's mechanically why it's not being preferred. the question is basically in euro, unlike the US dollar, it's not that big issue market. It's basically the bank had to get euro through the central bond market for the banking systems. So you don't want to pick your currency to a bond-based bank control more than a debt-based structures. That's why people don't prefer with that route, despite the economy GDP size is similar in size.
So this is a comment that goes back to why are we seeing so many representations of the US dollar and why aren't other? Yeah, it's a really good contribution. Thank you. Thank you.
Yeah. So I think we're out of time. Thank you all for coming. I think this was the last session. I think there were some other follow-up questions, but I'm sure Brynly and David will both be up here. So feel free to just come up, ask more questions. We're gonna also have the happy hour downstairs, so we can move over to that. It is downstairs, right? Just want to make sure. Yes, happy hour is downstairs. And thank you all for coming. I had a great time here. I hope you all did too. And I hope you enjoyed all the sessions earlier today.